Hello guys, so today is the 4 of the 30 days trading and making money online with AI. So today we are going to be learning all the trading terminology so that when we start trading proper, you will not be lost, right? So you will learn stuff like pending order, instant execution, you learn spread, bid, ask price, and all those stuff. So we are going to be going through all that today so that you familiarize yourself with what these things mean, and I will be showing you also practical example of it. So I don't know why most of you are just so excited about this whole trading thing. You just want to start placing orders, you want to start trading already, but calm down. I think the most important thing is knowledge. Go for knowledge so that when you start trading, you know why you are taking a trade from a particular point of interest, right? From a particular POI. So that should be your focus should be on education, on learning, on knowledge first than actually to trading. So by the time we are done with the preliminaries, like the fundamentals, we'll go into the advanced. And if you want to get trading, if you want to go if you want to start trading, and then you can start trading. But today I'll introduce you to all the trading terminologies: what is pending order, what is limit order, buy stop, sell stop, to buy limit. So all those stuff I'm going to be showing you today. And yes, and for those of you that have like questions, I gave us assignment in the last class, so most of you did it. And I sent you like the correction. And yeah, just keep at it. And I'm very very optimistic that we are all going to succeed in this journey. So without further ado, let me go into today's class. If you have any question as usual, drop it in the comment section. I'll be so glad to help. Okay.
So these are the terms that you have to familiarize yourself before you start trading. So the first thing is actually the currency pair, right? And I told you that our forex trading requires buying and selling of foreign exchange, right? So you need two currency currency pairs to trade. So the one that you want to buy versus the one you want to sell. So for you to do that, now there's something called the base currency. So base currency is basically the first currency in your pair. For instance, if you are euro USD, so the euro is the base currency. So NGN, Nigerian naira slash US dollar, so Nigerian dollar is the base currency. If you see GBP JPY, British pound is the base currency. So basically the first currency is actually what is referred to as the base currency. Then the code currency is the second pair. What you are trading against is actually what is referred to as the base currency. So the code currency. So the code currency is the second currency in a pair. Now, e.g., USD. So for the first instance that we use, right, the first example that we use when we say euro USD. So the USD is the code currency. So it is the currency used to price the base currency. Then we call the exchange rate. So basically, the exchange rate is actually how much of the code currency is needed to get 1 unit of the base currency. So for instance, NGN, right? NGN USD. So it's how much of the code currency that is needed to get the base currency. So for that instance, you need you need 156 Nigerian naira to get one US dollar, or you need 0.15, about 15 cents. Yes, about 15 cents to get 156 Nigerian naira, because it's actually the how much of the code currency. So if US dollars is the code currency, so it's how much of the code currency that you need 1 Nigerian dollar, right? So, and because Nigerian US dollars is way bigger than US Nigerian dollar, so for 1 US dollar, you need 156 naira to get $1. And if you reverse the case, so if you divide that amount, it will give you about 1.56 cents, right? So that 0.156 0.15 cents, so or thereabout. So that's the amount you need to get one 156 Nigerian dollars if you have uh if you want dollar, right? So here, then we are going to talk about pip. So what is a pip? Let me quickly show you how to add a base currency before we move here. So here, for instance, now if you go to here, quote, right? Now I told us that quote is the second currency pair. So the first one is usually the base currency here. So here, euro USD. Now euro is the base currency, so GBP USD. So GBP is the base currency, USD Canadian dollar. So USD United States dollars is the base currency, GBP JPY. So Great British Pound is the base currency. So to add that, you just tap here, right? Then you click on enter this thing, enter quote. So you can search for symbol. So whatever symbol, for instance, you want to add Polish zloty, or you want to add, okay, let's add Japanese yen, right? So JPY Canadian dollars, so Japanese yen Canadian dollar. Or you want to add Mexican peso versus Japanese yen, or whatever you want to add. So see USD, so United States dollar Japanese yen. So here in this instance, US dollars is the base currency and Japanese yen is what the quote currency. So you just tap on it and you see that it's here. So if you want to remove a currency pair, because this XAU is actually gold, if you want to remove, say, gold here, I trade gold a lot. Gold is not a currency pair. So here you hold it down and move to the left until you see delete. So you cannot delete the one that is actually open, but if, for instance, you want to remove euro USD, just tap on it, you just click. So for you to remove this one, you just open another chart before you'll be able to delete it. So if you tap on it now, you're able to delete. So that's how to. So I'm going to add gold. So gold is metal and I love trading it a lot because it makes a lot of money. So XAU, so it's called XAU. AU, for those of you that did sciences, is the chemical name, right, for gold. So Orium, so the X there symbolize Forex. So it is it. So Orium is Greek for gold, right? Orium US dollar. So the X there just symbolize Forex, right? So Forex gold. So I've added it, so you see that it's here. So you can also arrange this because you can just hold it and drag depending on. You can just arrange it, just tap on this menu and move it how you deem fit. You can move, you can sort it. You click on edit, then move this and move it and move it. So this small 3 thing is for moving. You can move it around. So yeah, so that's how to add a currency pair. So now that we've done that, so you know what the base currency is, you know what the quote currency is, and you know what the exchange rate is, right? So the next thing that we talk about is actually what a pip is. So but a pip is just basically the movement of price, right, in a currency pair. So for instance, if you tap on this, so click on tap and click on chart. Now the move, if gold moves just one up, so you see, let me zoom, you can see this movement, right? So currently gold is at $3,334 per ounce of gold. So what it means is that if it moves one by a degree, that smallest movement, right, is referred to as a pip. So just a movement in price of a commodity or of a currency pair. So that's what a pip is. So now you can see, I don't know if, So this is how far I can zoom it, but then yeah, I think is well zoom enough, so you can just see that as it's coming down, like the price is changing, right? So that's it. So that's what EPP is, and to calculate it is just easy, right? So then after that we'll do something very very important. There is something called like the bid price, the ask price, and the spread. So basically the bid price is now the bid price is the price at which buyers are willing to purchase a currency pair. If you want to sell a currency pair, you will do so at the bid price. So now, for instance, if you want to buy a currency pair, right? So let me show you. Now currently, gold, we have US dollars, right? When we initially we have Nigerian naira, so we needed a broker. That's why we downloaded SNet, so that they will give us access to buy the currency pair that we do. Let me go US dollar, Japanese yen. Yeah, so the dollar to give us the opportunity to get the cryptocurrency pair we need, right? You remember. So now, if we want to buy a dollar, if we want to buy, say, a Japanese yen, and we have US dollar, right? Now the price with which we are buying it at this exchange is called like the bid price. Sure, you understand? So for instance, now the bid price is actually the price we are buying it for. This one that is green, so 144.460. So that's the bid price. Then the ask price. So the ask price, so the price they are willing to offer. So the ask price or the offer price is the price at which sellers are willing to sell a currency pair. If you want to buy a cryptocurrency, now a currency pair, me and cryptocurrency, you do so at the ask price. So and the spread is basically like the difference between the ask price, right, and the bid price. It represents the cost of trading in the forex market, essentially for the broker commission. So let me show you something. Now you see this green thing, see this red. Let me show you. Let me go to settings, go to chart, so you can change those settings. So you see ask price is turned off. If I click on it, you see that let me go back to chart. See that it's just showing one. You understand? So usually the bid price is the price that you are buying, right? So the add price is the price that sellers are willing to sell, right? So if you want to buy a price, if you are buying here, so this is the point that you are going to buy. So but remember that you are buying, somebody is selling to you now, it's trading. You have to buy from somebody. You are buying from the broker. So the broker, this is the price that you're billing that you want to buy. But the broker, since they are the one that have the platform, they are going to sell it to you at a particular price. Sure, you understand? So that price which they are selling to you is referred to as the ask price, right? So for instance, and to turn that on, you go to your settings, so you go to chart, and you see here ask price line. If you tap it on, you are going to see the price. So this is the price. So look at here. If I press buy now, right? If I tap on buy, you understand, you see that is the green is here, but then this is where my order was executed. So you see the difference between here and here, that will be this thing. So that will be the spread. And whenever you execute an order, right, so let me show you history, you are going to definitely be on a loss. So now I'm in profit now, but then if you put an order, execute an order instantly, because of the spread, you are usually going to be on a loss because of the spread, right? So but this is an illustration for us to just understand. That's why I'm not actually taking like this trade, but this actually looks like a very very good trade, right? Because he just left the support. So if I was to take this trade now, my stop loss my take profit will be around $4, and I'll leave my stop loss around here. So I'll be risking $2 to gain $4, right? To here, then I'll modify trade. But then this, I'm just, the goal of this class is not for us to just take trade, it's just for us to learn. I'm just showing us how all these things is being done, right? So basically that's the difference. So I'm just giving you a practical example of what it is, so that you understand what it means. So okay, so let's continue. So I'm currently in profit of 4 cents, but I didn't plan this trade. So when we are going further, you will learn. So I'll just close all position to I just made 10 cents now. But because you don't just enter trade like that, you have to do your analysis before you enter the trade. Even though it looks like a very, very nice trade, but you don't just enter trade, because if you see this, it's 1 hour, and you can see that if you look at, you see that there's no major resistance here. So if you put it's going to go straight to TP, but that's not a goal, because here we are learning discipline, to which we are going to talk later in as the class progresses, right? So that's that. So what is leverage? So just see leverage, right, in forex as just, so like leverage in forex allows traders to control a large trading position with relatively small amount of capital. For example, 100:1 leverage means you can control $10,000 with just 100 of your own money. So for now, while leverage can amplify losses, it can also like affect your losses, right? So for instance, now, and to change your leverage, so just imagine that, okay, you have, so just see leverage as that collateral, right, that you put to take more risk or to get more reward. For instance, if you have $10, now if you put a leverage of 10, that means you can take a trade of $200. Sure, you understand? If you put a leverage of one of 100, right, you can take a trade of 2,000, something like that, right? So like 10 times your capital. So that's what leverage does for you. So you don't necessarily need to have like big capital like to make that profit. So what that means is that it's very, very risky too, that if market goes against you, that means you are going to be losing that much, right? So that is what leverage does. But then when we go further into that, you will understand better. So then very, very important too, then there is this concept that we have to, hope this thing is not too long, yeah, but basically now there's long position and short position, which I would like to discuss that, and also like the type of trading, the type of orders before I leave this. So I don't know, maybe this will be as long as maybe long, maybe say up to 20 minutes, but I don't want that. So now if you place a long position, what it means is that, or a buy position, that means that you are anticipating that the market is going to go bullish, then you buy. So for instance, let's go back to MetaTrader. Now if you are, so this is 15 minutes time frame, right? So this is 15 minutes time, so this is 1 minute time frame. So now when we start top down analysis, why we don't take trades from this point, even because of from 1 minute time frame, because of the noise and all. But for instance, if from your analysis on the daily time frame, USD is bearish, right? Now, so we look at 1 hour here, 1 hour. So there's this massive rejection to show that there's going to be a change. in trend, right? So it's going to start going bullish. So this is what it means. So when we look at candlestick, you understand. So you see from 4 hours, you see this rejection that it's actually going to go bullish. Now if we go to a lower time frame, which 1 hour, you can see here that it was actually bullish. So 30 minutes here, like that. So but then if you are saying that from your analysis, this thing is actually going to go up, what you are going to do, you buy. So placing a buy means you are going long, because you are anticipating that the market is going to go bullish, right? So that is going to go bullish. So when you click on buy, so here this on the MetaTrader, you see sell and buy. When you click on buy, it means you're anticipating that it's going to go bullish. So when you do that, if it goes to bullish, right? So when it goes bullish, then you are in profit. But if it goes bearish, then you are in loss. I did this thing. Then if you click on sell, so here if you tap on buy, so this is a live account, so that's why I'm not tapping on it. But if you tap, so if you do, okay, it's not much, so I didn't find that much here till here. So let me just do it so that you see. Now let's trickle down. Okay, so here for instance, if I click on buy here, so if I click on buy, so this where I bought here, this is where the market is, right? So if you see here, I'm on negative because I feel that the market is going to go up. So you see I'm in profit right now, right? So because it has passed where I anticipated. So here there's a major resistance here, so it might go down here. So let us take this profit so that will not be in loss. So basically that's like a buy position. So you see I've made 3 cents, right? But it's not as easy. It's not as easy as like I'm making profit now. You think don't you think that's how it's easy, right? So that's not how it is. So because if you start funding your account, start doing things, you blow your account, please. So please just take it easy. Then if you sell, so if you short a position, it means that from your analysis this thing is going to sell, right? So let's look at another currency pair. So let's use JPB JPY. Let's use JPB JPY. So it's going to, if this one is bullish, the other one is going to be bearish. So let's see. So at 5 minutes as a resistance, right? So if you click on sell, you understand, and the market starts going down, then you're going to be in profit. So basically that's that. So that's basically what long and short is. So because of how the time is, I think we'll just take time and do others. But because I actually want to show you what this thing means. So buy limit, sell stop, take profit. So here buy limit, sell limit, buy stop, sell stop, and how to use them and what they mean and that. But then I think I'll just stop this class here because I'm looking at